Hey everyone, and welcome to another episode of China Focus, the podcast where we shine a focus on the folks, the everyday people, their unique experiences, and the vibrant tapestry of life across China. I'm your host, Robert Jean.
And I'm Ella.
Okay, so when you picture Shanghai in your mind, what do you actually see? Is it that amazing skyline, Pudong, all those skyscrapers?
Yeah, that iconic view.
Right. And you probably think of it as, China's financial powerhouse, this buzzing city full of ambition, full of opportunity.
Absolutely. For decades, that's been the image, hasn't it? Shanghai as the symbol of China's economic miracle, a place where, futures were made.
It really projected this picture of just relentless growth and prosperity to the whole world.
And it's such a powerful image. I mean, that's the Shanghai many of us think we know, or the one we've seen, maybe read about.
But what happens when you kind of zoom in, when you go from that big picture down to street level, and you actually listen to people living there, working there right now?
Exactly. And that's really what we want to get into in this deep dive. We're looking at these observations, these experiences people are sharing, and honestly, they paint a very, very different picture.
What's going to help?
Well, one that's in really stark contrast, sometimes kind of unsettling contrast, to that long-held vision of Shanghai.
Okay, so we're going to look at what people are describing right now, focusing on where they're feeling the pressure, seeing these big changes.
That's the plan. We'll look at the job market, what's happening there, and then the property sector, Shanghai's famous real estate. Some surprising shifts happening.
It may be the biggest thing, how all this economic stuff is actually changing how people think, how they feel about their city, their future.
Yeah, the mindset shifts. It's crucial. What's really going on beneath that glittering surface?
All right, let's unpack it. So starting with the absolute basics, earning a living, the job situation. This seems to be the first place people are really noticing big changes. What's the general feeling?
I think the word that keeps popping up is precarity. Just this widespread feeling that finding work is, well, way harder than it used to be.
Harder how? Like just fewer jobs or?
Yeah, both, it seems. People are describing it as finding a job being harder than ever before. It doesn't sound like just a little dip. It feels like a fundamental change in how the job market works there.
Right. Fewer opportunities, maybe more people looking. Intense competition.
That's the sense you get. Fewer jobs available, a big pool of people needing work. So yeah, intense competition seems about right.
And it's not just finding a job, it's what those jobs actually pay. We're hearing some, frankly, shocking stories about salaries, right? Expectations being totally reset.
Oh, definitely. Let's take one example that came up. Someone looking for work, right? Based on their background, maybe they were reasonably expecting, say, 20,000 yuan a month.
Okay, 20K yuan. That sounds like a solid middle-class salary in Shanghai, generally speaking.
It was, or it was considered that way not long ago. But what they're actually being offered now, it's dramatically lower.
Like how much lower?
We're hearing about offers for similar kinds of roles coming in at 10,000 yuan, sometimes even less.
Wait, so potentially half of what they expected, just like that.
Yeah. Think about that, a 50% cut from what seemed like a reasonable expectation maybe just a year or two ago. It's not just a minor adjustment. It's a complete recalibration of what jobs are paying.
50%?
Oh.
Wow, that's huge. Is this mainly hitting those higher paying jobs, or is it affecting everyone?
It seems to be pretty broad. There's another story that really stood out about someone in a much simpler job, maybe basic admin support, or the description mentioned something like pouring water. Very entry-level stuff.
Okay, so lower wage bracket.
Right. They used to earn around 2,000 yuan a month for that kind of work now. For similar jobs, the offers are apparently just 1,000 yuan.
Also halved.
Exactly. Also a 50% drop, but starting from a much, much lower base. When your entire income gets cut in half like that, just covering rent and food becomes incredibly difficult.
Yeah, that's survival level stuff.
It really underscores that this isn't just about, say, finance guys losing bonuses. It seems to be a broader trend pushing down wages across the board, as one observation put it.
So this isn't just about trimming the fat. It's hitting the core earning potential for lots of people. Yeah. What kind of numbers are actually being talked about now? What are people seeing in job ads or hearing as offers?
Well, there are specific figures mentioned. For instance, some talk about offers specifically for female workers being around 8,800 yuan a month.
Okay.
Others might still be aiming for 10,000, maybe hoping some roles haven't been cut as badly.
Oh.
And yeah, you still hear talk of higher salaries, 100K or whatever, for very senior specialized roles, but the general weight of the offers seems to be shifting downwards. significantly. There's this feeling that people are chasing history, like they're expecting salaries that were normal a few years back, but just aren't realistic anymore. We also heard from someone making about 5,000 yuan now, and they contrasted that with others maybe still dreaming of 50,000.
That's a massive gap between reality and aspiration for some, then.
A huge gap. But the overall pressure is definitely pushing the average down.
And I suppose companies are changing how they advertise jobs, too, reflecting this.
Oh, for sure. Some are reportedly posting jobs with starting salaries like 3,000 or 4,000 yuan a month, which in Shanghai is, well, it's barely subsistence level.
Right.
And maybe even more telling, you're seeing more jobs listed as POA, price on application.
POA. Usually you see that for really high-level executive jobs, right, where it's super negotiable.
Exactly. But now apparently you're seeing it for more general positions. It kind of suggests companies are hesitant to even name a price. Maybe they're hoping to just pay as little as possible depending on who applies and how desperate they are.
Wow, POA for regular jobs.
Yeah.
That really signals a power shift, doesn't it, towards the employer?
It certainly feels that way.
And that anecdote about the 30 yuan a day job, I mean, that one was particularly jarring. Can you remind us about that?
Yeah, it really shows the extreme low end. This story was about a company offering just one position, paying only 30 yuan per day.
30 yuan for a whole day's work.
Presumably. The conditions were minimal.
Yeah.
Remember, bring your own laptop, they might give you Wi-Fi, maybe some basic food, that's it.
And you have to bring your own tools, basically.
Right. Offering that little for what's likely a full day and requiring the worker to provide essential equipment, it says a lot about how little some companies are willing to invest in certain labor and maybe how many people are willing to take almost anything.
Just to get something coming in. It shows how low the floor has dropped in parts of the market.
It really does. It's hard to imagine living on that in a city like Shanghai.
Absolutely. And even for people who had what they thought were stable jobs, that security seems to be gone. Layoffs are happening frequently.
Yes, the term used was a big wave of layoffs. It's not just isolated cases. It's described as being pretty widespread.
Okay. Now, sometimes severance packages could be decent, right? I think there were mentions of things like N+8 or N+9.
That's right. N being the number of years you worked there. So if you worked for, say, 10 years, N+8 or N+9 could mean getting 18 or 19 months worth of salary as severance.
Which, honestly, on the surface, nearly 2 years' pay sounds pretty generous compared to, severance elsewhere in the world sometimes.
It can definitely be a substantial sum of money, no question. But, and this is the crucial part, you have to put it in the context of everything else we just discussed.
Right. The difficulty finding a new job.
Exactly. If it takes you many, many months, maybe even a year or more, to find new work, and that new work is likely paying way less than your old job,
then that severance isn't a bonus, it's your lifeline.
Precisely. It becomes the money you have to live on for potentially a very long time. It's a buffer, sure, against immediate disaster, but it doesn't really solve the underlying problem of a tough job market and lower future earnings.
It cushions the fall, but the landing is still hard.
A very good way to put it. The exit terms might look okay on paper, but the environment you're exiting into is much harsher.
And just the personal shock. Losing a job after, say, 10 or 20 years.
It's described as being incredibly jarring, even for people who felt totally secure. They'd been with the company 10, 15, even 20 years. There was this assumption, I think, that loyalty and long service meant stability in Shanghai.
That social contract still held.
Yeah. And now, for many, that seems shattered. Suddenly losing your job after that long leaves people feeling, well, lost, uncertain, wondering what all that experience is actually worth now.
And facing the reality that the market just pays less.
That's the tough pill to swallow. The fundamental truth seems to be that jobs just don't pay what they used to. Adapting to that, financially and emotionally, when you've built your life around those previous income levels, it's a huge challenge.
Okay, so the job picture is, it's tough. Fewer opportunities, lower pay, lots of uncertainty. Let's pivot now to the other big pillar of Shanghai's image, property. Real estate there wasn't just about having a home. It was like the ultimate investment, right? A symbol of making it.
Absolutely. For so long, Shanghai property felt like a one-way bet, almost guaranteed wealth creation, a bedrock asset.
So what's happening there now? Is it reflecting the same kind of pressures we see in the job market?
Oh, absolutely. The shift in the property market is, if anything, even more dramatic. The clear overall trend is a major downturn.
A downturn. So prices are actually falling in Shanghai.
Widely reported to be falling, yes. And the market itself is described as incredibly difficult. Selling a property, it's not the quick, easy process it might have been. It's apparently much, much harder now. That core belief in ever-rising values, it's been seriously shaken.
And we have some specific examples, right? Numbers that really show the scale of these drops.
We do. There's one really vivid example mentioned. A property initially listed for 20 million yuan.
Okay, high end?
Definitely. Its asking price reportedly dropped all the way down to 15 million yuan.
Wow, that's a 5 million yuan drop, 25%.
A 25% cut in the asking price. And this observation was apparently from February 2025, so quite recently.
Yeah.
For a major asset like that, losing a quarter of its perceived value, it's huge.
That's not just a market correction. That's potentially life-changing for the owner.
Yeah.
A massive financial hit.
It absolutely is. And there's another story about a property in what was called a small area, maybe slightly less prime, but still desirable. A 180 square meter place.
Okay.
Back in 2019, at the market peak maybe, it was valued at 25 million yuan. The price per square meter was mentioned as being very high then. Now, that same property is valued much lower, maybe around 20 million. And the owner is apparently finding it really hard to sell. They might even have to consider dropping it further, perhaps towards 18.5 million, still a massive loss from 2019.
And there was a personal story connected to that one, wasn't there? About a Miss Yuan that really highlighted the costs involved.
Yes, Miss Yuan's situation. It's a really potent example of the real-world pain. She bought that place in 2019 for the 25 million.
Okay.
Now she needs to sell, but the market might only give her 20 million, maybe less. But that's not the whole story. Just to sell it, she might have to fork out around 800,000 yuan.
800,000 in
Right.
what? Taxes?
Yeah.
Fees?
Yeah, taxes, transaction fees, all that stuff. And on top of that, she still owes, I think the number mentioned was 8 million yuan on the mortgage principal.
So let me get this straight.
Yeah.
She sells for maybe 5 million less than she paid, has to pay almost another million just in fees, and still has an 8 million loan.
Pretty much. The calculation is that she's losing a huge amount just on the transaction itself. And that's before you even factor in all the interest she's paid on that big loan over the last few years.
Wow. So the safe investment has turned into a massive financial burden. That's devastating.
It really is. It makes it tangible. It's not just abstract market data. It's people's life savings potentially evaporating.
Were there examples of even more drastic price cuts, maybe smaller places, or owners really needing to sell fast?
Unfortunately, yes. There was one really shocking case mentioned. A smaller apartment, 56 square meters, initially listed at 7 million yuan.
Okay, still a lot for a small place.
Exactly. But the asking price reportedly plummeted all the way down to 2.25 million yuan.
From 7 million down to 2.25 million. That's
Right.
almost a 70% drop.
Yeah, a colossal cut. It just screams desperation, doesn't it? The owner likely had to sell, maybe because of job loss or other financial pressures we talked about, needing cash urgently.
It shows the extreme pressure some people must be under.
There were other mentions, too, a property dropping from 2.1 million to 1.3 million in another area, a general reference to 5 million yuan drops being seen. These aren't just one-offs. They seem symptomatic of a market where sellers have lost significant bargaining power.
And it's not just sales, right? The rental market is feeling it too.
That's right. Rents are also heading downwards. The average rent per square meter was reported at 83.1 yuan in March. That was down from 87.2 yuan previously.
Okay, how does that translate for, say, a typical apartment?
Well, if you take a standard 100 square meter place, that drop means about 410 yuan less rent per month for the landlord, over 5,000 yuan less per year.
Not insignificant for someone relying on that income.
Definitely not. And interestingly, Shanghai's average rent decrease was actually steeper than the national average. It was down something like 0.69% month on month and a pretty big 7.23% year on year.
So whether you're selling or renting out, the income potential has dropped noticeably. And the actual market activity, like how many properties are listed, how long they take to sell, that reflects the difficulty too.
Big time. The number of properties listed for sale has apparently surged. Over 180,000 listings reported in 2024. That's like 40,000 more than before things got really tough.
More supply, fewer buyers.
Yeah.
Basic economics says prices fall.
Exactly. And compounding that is how long it takes to actually sell. The average time on market, it's gone up dramatically from around 89 days in 2023
Okay, about 3 months.
to 142 days now.
142 days? That's nearly 5 months, almost double the time.
Yeah, nearly a 60% increase. Imagine having your money tied up for almost half a year, just waiting, hoping for a buyer, probably watching prices continue to slide.
That really paints a picture of a stalled market. Lots of hesitation from buyers.
That's the feeling. The observation is that normal people, just average families, they're really hesitant to buy right now. They just don't see property as that safe store of value anymore.
The perception has changed?
Fundamentally. For decades, buying in Shanghai felt like a guaranteed win. That belief that values only go up, it seems broken for many. It's no longer seen as that secure path to wealth.
And the forecasts?
Yeah.
Are they suggesting this is just a temporary blip or something longer term?
Well, the outlook presented in these observations is, well, it's not optimistic for a quick rebound. Some predictions suggest prices could fall further, maybe another 10–15% from where they are now.
Wow, even more.
And looking longer term, at property investment volume, the projections are pretty stark. Some estimates see investment potentially falling by around 50% from the peak years by maybe 2035. That's trillions of yuan in lost investment activity.
Trillions.
Yeah. And the annual investment growth projections, they're looking very low, maybe even negative for years to come. Some analyses suggest it could take decades, literally decades, to get back to the peak environment levels we saw just a few years ago.
Decades. So no quick V-shaped recovery expected in this view.
Not according to these takes, no. They draw a really sharp contrast with the past, like 20 years ago when everything was booming. That whole value creation effect of property, the idea that it reliably made you richer, that seems to have evaporated or at least be on hold for a long time based on these forecasts.
So this difficult property situation, combined with the job market issues, it just completely clashes with that global image of Shanghai as this ever-booming economic engine.
It really does. And it impacts almost everyone. Sellers, buyers, renters, people just trying to feel secure about their finances in a city where property was just so central to everything.
Yeah, it's a challenging picture emerging from jobs and property. Which leads us, I think, naturally to the third big area. How is all this affecting people's thinking, their mindset, their priorities? When those basic pillars of jobs and home value feel shaky, it must change how people approach things.
Oh, profoundly. One of the most striking things described is this widespread lowering of expectations.
Lowering expectations. How so?
Well, the ambition that really defined Shanghai for so long, aiming for rapid wealth, constant career growth, big entrepreneurial ventures, that seems to be fading for many. It's being replaced by something much more basic.
Like what?
The phrase that came up was just wanting to survive. That's the main goal now for many. It's like people's horizons have shrunk. It's less about thriving and more about just, getting by.
So less focused on aspiration, luxury, keeping up appearances, more on just fundamentals, security.
Precisely. People are reportedly spending less, especially on non-essentials, luxury goods. The focus is on needs, not wants. That desire to sort of show off status through consumption seems much less prevalent.
And instead of chasing the next big raise or investment win, it's more about holding on to what you have.
Exactly. A much more cautious, defensive stance, trying to preserve whatever financial stability they've got rather than aggressively seeking more gains.
And does that caution show up in spending and investment decisions? Are people just holding back?
Yes, that's a major theme. A real hesitation to spend big. Buying a car, renovating, investing in stocks, certainly property. People are reportedly just holding on to cash.
Keeping their powder dry, so to speak.
Yeah, because the future feels so uncertain, so unpredictable. When jobs aren't secure and house prices are falling, cash feels like the only safe haven. It's about managing risk in a very unstable environment.
And all this stress, this uncertainty, the economic difficulty, it must take an emotional toll, right? There's that term mentioned, dipsic.
Yes, dipsic. It was used to describe this kind of prevalent mood. A feeling of being low, a bit depressed, generally down.
Not just individuals feeling sad, but like a collective feeling.
That's how it was described. Almost like a mood hanging over the city. The phrase, everyone is dipsic, really captured that sense of it being widespread.
And it's directly linked to the economy.
Yeah, very much tied to the job worries, the property market falling, the general uncertainty about what comes next. It shows up as maybe a lack of energy, less enthusiasm for big plans or taking risks. People are just focused on managing the day-to-day, getting through it.
That sounds so different from the Shanghai narrative we started with. That image of boundless energy, optimism, constant progress.
It's a massive contrast, isn't it? Think back 10, 20, 30 years. Shanghai was presented, and for many people it was, this place of just limitless opportunity, go-getting spirit, ambition was rewarded, the future always felt brighter.
And now?
Now this current mindset lowered expectations, survival focus, hesitation, this collective dipsic feeling. It's just a stark and frankly quite a sobering shift from that confident expansionist era. It feels like it's changing the city's character, at least from the perspective of people living through this.
So these economic numbers, they're not abstract. They're hitting people's sense of hope, their emotional state, their view of the future.
Absolutely. It forces people to rethink everything: life plans, career paths, decisions about family, how they see risk. When those traditional routes to success, like a steady job and rising property values, suddenly seem unreliable, you have to fundamentally reassess. It challenges the whole belief system that drove the city's energy for so long.
Okay, we've looked at the symptoms, jobs, property, and the impact on people's feelings and mindset. What about the underlying causes? Did the discussions we reviewed touch on why this might be happening? What factors are seen as driving this big shift in Shanghai?
Well, it's obviously complex, right? No single cause. But the observations do point to a few perceived factors. There's definitely mention of policy or regulation having an impact.
Meaning government actions are seen as playing a role, particularly in the markets.
Yeah, the sense is that external directives, changes in the rules of the game, are significant factors shaping the current climate, especially things affecting, say, the property market.
Okay, so policy influence is one element. There was also that phrase, water source or resource issues. That sounded a bit metaphorical. How might we interpret that?
It does sound metaphorical, yeah. In the context of an economic discussion, hearing about issues with the water source could be an analogy. It might represent a perceived lack of something fundamental needed for growth.
Like money, capital.
Could be.
Yeah.
A shortage of available funds flowing through the economy. Or maybe a scarcity of profitable opportunities themselves. Or even, you could argue, a depletion of confidence and optimism. Those are vital resources too, right?
Sure. Fuel for the engine.
Exactly. So while the precise meaning might be open to interpretation, it points to this feeling of a blockage or constraint at a really basic level, something holding back the economy.
That's a powerful image. And there's also just the sense that this might be part of a bigger cycle, not just a Shanghai issue, but a broader economic phase.
Yes, that definitely comes through. The feeling that the economy is simply in a down cycle, that these difficulties aren't just a temporary blip that will bounce back quickly, but part of a larger, maybe more drawn-out period of slower growth or even contraction.
Okay. And tied into that maybe was the mention of internal circulation, a shift towards focusing more domestically.
Yeah, that concept is mentioned, sometimes contrasted with the previous era, which felt much more focused on global trade and international investment, those connections.
Shanghai being the prime example of that outward focus.
Right. So a pivot towards prioritizing the domestic economy, while maybe having some benefits, could also pose challenges for a city like Shanghai that really thrived as that global connector. It could impact foreign investment, international business, that whole cosmopolitan vibe.
And going back to property for a second, those long-term forecasts you mentioned earlier, decades to recover, they really seem to support this idea of a deeper structural shift, not just a quick downturn.
They absolutely do. Those sobering projections, investment volume potentially dropping 50% from the peak by 2035, maybe taking decades to climb back, it really underscores this isn't seen as a temporary correction.
Trillions in lost investment value potentially.
Exactly. It speaks to that perceived disappearance of property's reliable value creation effect. Comparing now to the boom times 20 years ago just highlights how different the current environment feels and how different the projected future looks according to these views.
So all these factors, policy, maybe resource constraints, the down cycle, a shift in economic focus, they're seen as feeding into the problems in jobs and property and then filtering down to how people feel and act.
That seems to be the connection people are making, yes. These larger forces are translating directly into those individual experiences of job hunting struggles, falling home values, and that more cautious, uncertain mindset we discussed.
And it hits everyone. Job seekers, homeowners worried about mortgages, families trying to plan for the future.
It creates this pervasive sense of instability. Exactly. It fundamentally challenges that long-standing narrative of Shanghai as the city of endless growth and opportunity.
Well, this deep dive has certainly painted a picture of Shanghai that's dramatically different from its usual image. That gleaming, ultra-modern, unstoppable economic force.
It really highlights the contrast, doesn't it, between that renowned global status and the lived realities people are describing on the ground right now. We've heard about the very real struggles in the job market.
Yeah, the falling salaries, the difficulty finding work.
The dramatic cool down in the property market with serious financial pain for homeowners.
Those price drops, the Mizion story. Really stark.
And then the impact on mindset, that shift towards caution, survival, that feeling of being, well, dipsick.
It's a powerful reminder, isn't it, that even in a city held up as a model of success, there can be these significant underlying shifts and challenges affecting ordinary people's lives profoundly.
Absolutely. Seeing how these big economic forces play out in individual stories about jobs, homes, and just general outlook,
Yeah.
it gives you a real window into what's happening.
And it makes you wonder, doesn't it? What does this shift in such a globally important city like Shanghai tell us about bigger trends? Are there echoes of this elsewhere?
That's the big question to ponder, I think. How do these specific experiences connect to broader economic or social changes happening globally? It's definitely food for thought.
It certainly is. Well, thank you for joining us for this deep dive into the shifting realities in Shanghai today. We hope exploring these observations and experiences has been insightful for you listening.
Yeah, and we genuinely love to hear from you. Please leave your comments below. What are your thoughts? Do you have any related perspectives or experiences to share? We really welcome the interaction.
Definitely. And if you found this valuable, please consider giving it a like and maybe subscribe to the channel. It helps us continue bringing you these kinds of in-depth discussions.
Thanks for tuning in.
Until next time.